Hi, it's Dave Nimick with Keller Williams Realty. Wanted to talk to you today about how to time the market perfectly. First off, obviously, the reason to try to time the market is to get the best possible deal. And a lot of us believe that we know not only what will happen, but when it's going to happen. The challenge with doing so and timing, in this case, interest rates, the rates have been trending upwards. Historically, after major economic events like the mortgage meltdown a decade or so ago, the rates tend to trend upwards. And even though they've been low for a while, the economy itself is stronger. The Fed has said that they want to raise rates and has done so. And we're just at a point where if you're assuming it's going to go in one direction, you should assume that it's going to go up and not down. Now, worldwide events can change this, of course, but you don't want to figure those will happen or that the effect that they have is going to be a long-term effect. So generally you want to think at least, I'll just wait for them to go down. And in the end, that's probably just going to cost you money. Right below this is some information. I went to bankrate.com and just ran some numbers on their mortgage calculator as far as the differences in costs based on different interest rates. At 4.5%, which as of today is what the rates are, at 5%, 5.5%, and 6%. So take a look at that, and you'll see that there are some dramatic differences in the cost to you on a monthly, even daily basis, plus the overall interest you pay on the loan. So bottom line, whether buying or selling or both, it's going to affect you, the rates going up. As a buyer, it's just going to cost you more to borrow money. As a seller, it's going to affect your overall available pool of buyers. So deciding to wait is very likely going to cost you substantial dollars out of your pocket. If the rates do dip, they're probably not going to do so for very long. And while it's tempting to wait, that could, again, be very expensive. The question to ask yourself is, will you feel that you lost out if you paid 4.5% interest if the rates a year or 2 years from now in the not too distant future, whenever that may be, are in the sixes? My guess is if you got a 4.5% rate and the rates are in the sixes or even higher, you're going to feel pretty good about it. So just put yourself in the future when asking yourself that question. If you do have other questions, want to reach out to us, please do so at inquire@thenimicteam.com or 773-969-6683. Thanks.